Global crude prices have hit new lows. Oil is unlikely to rebound as there are too many reasons for a further decline. Meanwhile, the US dollar broke above the level of 80 against the ruble. The Russian currency will remain under pressure amid renewed lockdowns and negative dynamics in the energy market. A plunge in oil prices was triggered by extended lockdown measures, high volatility in global financial markets, and a massive risk aversion. Besides, the data from Baker Hughes on a rising number of active oil rigs and the strengthening of the US dollar added to the negative sentiment on oil. The rate of decline accelerated amid speculations that Saudi Arabia was planning to cut its crude prices for Asian delivery, and this was another proof that demand for fuel has considerably declined. Over the past week, oil prices collapsed by more than 10%. Today, both Brent and WTI futures are facing a massive sell-off. In the morning trade, oil prices fell by more than 4%. Brent futures contract with the nearest expiration slipped to $37 per barrel, while WTI dropped to $34 per barrel. A steep fall in oil prices raises hopes that the OPEC Plus will expand its production cuts during next meeting in November. However, the alliance members may start to compete for the market share instead. This scenario is very likely given the increased oil output in Brazil, the US, and especially Libya. In this case, oil could slide even lower. The next downward target for Brent is located near the level of $35 per barrel. The price may sink even more if oil producers want to hedge the price of their futures oil supplies. The level of 80 served as a strong support for the ruble. However, today it has broken below this mark and the pair has approached the 80.50 level. In the mid-session, the ruble retreated against the US dollar by more than 1%, while last week it dropped by 4.7%. The ruble's collapse is hardly surprising amid the current negative background. The widening coronavirus lockdowns in Europe are weighing on energy market, and falling oil prices are dragging the ruble down. In addition, Joe Biden's leading position in the election race also serves as a bearish factor for oil. If Democrats win, they will most probably lift all sanctions against Iran, and this is already putting pressure on crude prices. Ahead of the US election, the greenback is expected to consolidate above the psychologically important level of 80 rubles. It may well test the high of 82 rubles per dollar, which was last seen in March this year. The ruble had difficult times during Trump's presidency. However, it may face more challenges if Joe Biden takes office. Yet most of the risks have already been priced in the quotes. The ruble may still edge higher by the end of the year. That's all for now. Thank you for watching and have a nice trading day. Bye.